Everyone wants to know how wealthy people actually invest their money in crypto, but most millionaires not only are not going to tell you the truth about their strategy, but most of them don't even have a strategy. But I built multiple multi-million-dollar businesses over the last 30 years. I own over $30 million in commercial real estate, and I make well over 7 figures annually from trading and business ventures. And I don't say that to brag, but my approach to crypto investing probably is the exact opposite of what you'd expect. Now, legally, I do have to tell you, crypto is risky. Investing is risky, so don't listen to anything I'm saying. This is all for entertainment purposes, but these results actually are typical for my students who follow the system. So in this video, I'm going to show you the real mindset, the risk tolerance, and allocation strategies that separate people like me from the beginners who are still hoping to get rich quick. So my real world portfolio allocation might not be what most people think. I own crypto Renegades, I teach people how to trade, and I hold most of my assets in real estate. Now, I do have a large portfolio in crypto, but percentage-wise, it's probably in the 10 to 20% range of my entire investment portfolio. Why? Because it's still considered a risky and very volatile asset. Although I do believe that crypto is here to stay, and the powers that be are lining up right now. Banks, financial institutions, hedge funds, the biggest in the world, are all gearing up to transfer over to the digital age and blockchain technology. You should have a portion of your investment and risk tolerance in the crypto space. How much? It does depend on your own philosophy. I wouldn't be able to give you that advice unless I spoke to you personally and really understood where you were coming from. But 10 to 20%, I would say that that's actually now on the conservative side. Some multimillionaires, some very well-known business people who have 50, 60%, even 70% in crypto right now. They are really betting on Bitcoin, XRP, and some of the bigger cryptos to move to the upside in a drastic way. I mean, let's take Bitcoin, for instance. Bitcoin has averaged 100% per year over the last decade. That's 10 consecutive years of 100% growth. The value of the US dollar has gone down. The purchasing power has gone down 8 to 10% per year over that same time frame. If you really understand how money works, if you would have had $1 million sitting in your savings account for 10 years over the last decade, your purchasing power today would be about $200,000. You would have lost about 8 to 10% per year. On the other hand, if you had $1 million of Bitcoin sitting in an account 10 years ago, you would have gone up in value at an average rate of 100% per year. So your purchasing power in 10 years would be $10 million as opposed to the $200,000 that your $1 million in cash went down to. A lot of people say, well, Niko, when you're trading, when should I take profit? When should I pull that money back into US dollar? When should I take that money out? And my question always is, why would you want to do that? Why would you invest in a crypto like Bitcoin, trade on a Bitcoin margin to earn more Bitcoin, and then as soon as you make a lot of it, transfer it back into an asset class that is losing value at a rate of 8 to 10% per year, rather than keep it in Bitcoin? See, a lot of people are always stuck on that fiat currency value and mindset because that's what they've known their whole life. Well, I need money, right? I got to pay my bills, right? I got to take the cash out. I got to pay my rent. I got to pay my mortgage. I got to buy a new house, new car. I got to take my wife or children on vacation, whatever the case may be. The reality is that when you really understand what's valuable and what's going up at a higher rate than US dollars, then you might want to stop keeping your money in money. I know that might sound strange, but you might want to start keeping your wealth or taking your cash and moving it into asset classes that continue to go up at a much higher rate of return. Real estate, for instance, crypto, fine art, even exotic cars, watches, things like that tend to hold their value and go up in value even faster than real estate, for instance. I have a friend who specializes in high-end timepieces. He likes PF Jorns. If you go and look at the purchasing price or the value of a PF Jorn last year or the year before, at the time of this reporting in 2025, you could have bought one of these watches for $100,000 to $125,000, and 1 year later, they're trading at $250,000 to $300,000. Not many things are going up in value at that rate. Certainly not cash. If you would have left that $100,000 in the bank instead of bought that watch, your purchasing power would have been at least 10 to 15% less a year later. That's terrible. That sucks. Why is that happening? Well, it's simply inflation. It's the printing press. They're printing more dollars, so the more that exists, the value goes down. Things don't generally get more expensive over time. It just takes more dollars to buy the same thing you used to be able to buy because the value of the dollar is going down in value in comparison to the thing that you're trying to buy. Back to crypto. So I will say that, 10 to 15, maybe 20% makes sense to me, along with my business and real estate investments, because I have a diversified portfolio. I am spreading around things in different niches. Business is the most profitable and lucrative investment that you can make. If you have a business or you are starting a business, you have the potential to earn a lot more money with a business than you do in any investments. But what you do with your earned income, what you do with the money that you make from your job or your business, is what we call investing. And that is when you're basically sending your dollars out to go to work for you. You're sending just look at them as like employees. Every dollar is an employee, and you're going to put it out there in the workforce, right? And you want that employee to go make you more dollars. Okay, so when you invest in Bitcoin or real estate or the stock portfolio or high-end watches or art or anything, gold, silver, anything that is in an asset class that's going to continue to go up in value, then that is called investing, and that is where most people want to be. There are different quadrants to earning income. The first one is trading your time for money. That's a job. A business is where you can start to leverage your time by hiring other people or creating systems and putting systems in place that do all the selling and telling for you, certain mechanisms like websites, landing pages, and autoresponders and follow-up emailed sequences and things like that, which does a lot of work for you, and it frees up your time to work on the business rather than in the business. And then maybe hiring salespeople to answer questions and speak to potential customers to help bring in more revenue. Once that revenue comes in, then it's a matter of allocating that revenue into things. What most people do wrong is when they start making money, they go and buy the toys, they buy the nice house, they buy the luxuries. They're basically trading that hard-earned money for depreciating assets rather than taking that hard-earned money and putting it into investments that will continue to go up in value and earn them more cash flow. That is the first step. So first, you got earned income from a job or a business. Then second, you take that earned income and you invest it in real estate, crypto, the stock market, and other asset classes that tend to go up in value. I would say to invest in things that you are particularly already interested in. You don't necessarily want to just invest in something that just you like, but no one else cares about. Obviously, it has to be an asset class that tends to go up in value. I prefer real estate and crypto. Those are my two main things. I can honestly say that there's not much out there that has even come close to the appreciation of Bitcoin over the last decade and crypto in general. There are a lot of multi-millionaires, even billionaires made in the crypto space by just holding specific coin or crypto. Now, are you going to buy a crypto and it's going to go up 10,000x in the next 5 months or so? Is it still possible? Yes, there are cryptos out there that will do multiple 100x gains from the time they launch to the time they hit their peak. However, you being in on that investment or you knowing about it and being able to get in on it right before it's about to go up is the difficult part. You have to understand what you're doing. You have to know what to look for. You have to be around people that actually know what they're doing and know how to find these types of opportunities. We do that in Crypto Renegades. We have an actual ICO section in our private Discord group. We do share that with members in our group. And, if you want to learn how to build a consistent income through crypto futures, trading in less than 4 hours per week, I'm doing a free training where I'll show you my crypto wormhole method that my students use to generate multiple, triple, and quadruple digit gains, sometimes on a daily basis. Huge profit. Just click the first link in the description to secure your spot. As far as risk tolerance goes, that comes from real wealth. The more money you have, the more investments you have, the more you can risk, but also the less you want to risk. There's a weird paradigm that happens that when you start to make a lot of money or you have a lot to lose, you want to risk less, not more. So usually if all you have is $100 and you're going to try to swing for the fences and hit a home run, you can then take the riskiest investment with that $100 because if you lose it, then you're not going to move. You're not going to get kicked out of your house. It's not going to cause you to be in the poorhouse. It's only $100, but if it works, you could make many times that amount on that high risk investment. But if you have hundreds of thousands of dollars, you do not want to swing for the fences. You do not want to put all those eggs in one basket, and you do not want to risk all of that on a very risky investment. You might want to risk 1 to 3, maybe 5% of that on a risky investment. And that's how the rich continue to get richer. The more money you accumulate, the bigger your trading account gets, the less you risk, the smaller percentage of the entire amount you risk on a particular investment or a trade. And you continue to grow your account by doing that. It may seem boring and it may seem very consistent and disciplined, but isn't that how everything works? The disciplined and consistent approach to everything in life is how you get what you want. Whether it's washboard abs, getting in the best physical shape, you need to be disciplined and you need to be consistent. Nothing's going to come overnight. You need to make these little steps and these little moves every day. And you look in the mirror here and maybe nothing happened, but a week later, wow, you notice. A month later, obviously, you step on the scale, you feel different, you look different, your clothes fit better. A couple years later, wow, what a difference, right? You have to think that way also when you're looking at your investment portfolio and deciding which way to go and where to put your money. Now, the multi-millionaire mindset versus the beginner's thinking. Basically, we treat crypto as one part of our diversified wealth portfolio alongside businesses and real estate investments. We're not betting our lifestyle on crypto like beginners do. We're not betting everything on one thing. We are diversified. And if you have 10,000, 15,000, 20,000, 50,000, you don't go and put it all in on one thing. You have to be more strategic about that. In our mastermind, we teach and share our ideas and what we think is the right thing to do. And I can't just give a blanket recommendation because each person is different. It does depend on your risk tolerance, depends on how much you have, what your earnings are and what you're accustomed to and what you're willing to risk. My perspective on dollar losing purchasing power while Bitcoin has historically appreciated 80 to 100% per year is very, very common knowledge in my group. I talk about it all the time. My approach with other appreciating assets in our portfolio like real estate and gold and silver, I like gold, I like silver, I have a lot of it, and I do talk about it and show it. I like to hold it, I like to touch it, and I like to feel it. But is that going to get you rich just having some silver coins or gold coins? No, it's more of a hedge against inflation, and it is just a strategy to protect your wealth because, when the value continues to go down, silver coins, gold coins, they tend to continue to go up in value, or at the very least hold their value, which is the important part, right? That's the hedge against inflation. So what we want to do is we want to take our hard-earned dollars and move it into assets that at least earn 10 to 15% or more per year. Does that sound simple? No, because inflation is 8 to 10% a year if you count everything. When you talk about taxes and everything else eroding away at your hard-earned money, you need to earn at least 10% per year just to break even on your money. So you need to find investments like real estate and certain cryptos, and you have to understand why to get into them, how to get into them. It's not just a matter of buying a house. It has to be in the right area. It's not just a matter of buying an apartment complex. It has to be in a developing area where there is a demand for housing and there's jobs and there's opportunities and it's not a slum, and it has to be clean and it has to be inviting, and tenants have to want to live there, right? And you have to be a good landlord. You have to understand these things. So it's not just as easy as buying an apartment building and throwing some money into XRP. Now, could you just throw some money into XRP and get really lucky and XRP shoots to $1,000 over the coming months or years? Yes, you could. And that happens to a lot of people. But we don't want to live our lives depending on luck. We want to be more strategic, and we want to do things in a more systematic approach that ensures that we get the result that we want over time. I hope you enjoyed this video, but building multiple income streams first, treat crypto as one piece of a larger wealth strategy and approach it with the patience that comes from financial security. But if you want to learn how to generate consistent income through crypto, futures, contract trading, while you're building this foundation, I'm hosting a free training on my crypto wormhole method. Hit the first link in the description to grab your spot, and I'll see you there.